Starbucks is a business and a company that I have talked about a lot on this channel. So today I'm going to be talking the talk and walking the walk and explaining why I love Starbucks so much as a company. We'll be going over everything you need to know, whether it be their business model itself, how they secretly operate as a bank, their financials, dividends, share buybacks, and everything you need to know as a long-term investor. And if you like this style of video and you want me to go over a stock, become a channel member today and you'll get instant access to a request, exclusive episodes, other awesome perks. It's a great way to support the channel along with getting the videos you want to see. And with all that out of the way, roll the intro.
Hello, I like money.
Alright, to start off, let's talk about Starbucks, what their business actually is, their business model, etc. Starbucks, together with its subsidiaries, operates as a roaster, marketer, and retailer of specialty coffee worldwide. The company operates through three different business segments: North America, international, and channel development. Mainly in their stores, Starbucks sells coffee products, they sell tea, food items, even though the food tastes like garbage. Starbucks Corporation has been around since 1971 with three initial founders. I'll link a Starbucks review that I did on the actual company itself, a much more in-depth review if you want to learn more about the history. That's in the top right corner right now. Starbucks' main customer base is the middle and higher class individuals, as their products are a little on the pricier side. But trust me, a lot of lower income individuals will regardless go to Starbucks regardless of their bank account number. Today, Starbucks operates over 35,000 stores across the world, with main geographics being in North America and China. Typically, you're going to be finding Starbucks stores in much more developed economies in the world. That's why you don't really see it in Africa that much. Starbucks is aggressively building and opening new stores in China, which is a huge part of their future and their plans for future free cash flow growth. This is a big risk, though, with the company and a big bet that they're taking. Starbucks stock and financials were severely impacted due to the store closures in China due to the lockdowns that they had. This is a big potential risk with Starbucks, I believe, is how China really operates. If you're going to see China continue to do lockdown and just kind of be inconsistent with it, I don't think that's going to be a good thing for Starbucks stock whatsoever. With that said, though, a good majority of Starbucks' stores are in North America at the moment, and I want to talk about and discuss a huge reason why I'm so bullish on Starbucks for the long term, which is how they secretly operate as a bank. Did you know that Starbucks secretly operates as a bank? Me neither. Starbucks has their rewards app, which millions of people use on the daily to pay for their coffee. It's viewed from the outside as a more convenient way to pay for the coffee without having to use cash, and just automatically link your credit card to the app. Essentially, you put money into the Starbucks app. From there, Starbucks can take that money interest-free, use it to pay juicy dividends to shareholders, do share buybacks, capital expenditures, do new stores, etc. Starbucks can take this money while it's just sitting in your account, and they can use it interest-free. This saves them millions of dollars every year. This gives Starbucks a huge competitive advantage over other cafes and other coffee shops, as Starbucks can more aggressively grow their business, build new stores, etc. Starbucks has also been aggressively growing their rewards program too when it comes to the amount of members that they have. Quarter after quarter since 2017, they have 12.9 million users. Today, as of quarter one in 2023, they have 30.4 million users, nearly tripling it. It's truly a win-win for the Starbucks Corporation and the customers themselves. The customers can have a better experience, do online pre-order, and Starbucks can take that money interest-free and use it to build their business. It's truly a genius move by the Starbucks Corporation. Speaking of genius move, they also just reinvested a whole lot of money just last year into their stores. The big benefit to this is really being able to quickly and more efficiently brew different drinks. For example, last year I couldn't get decaf coffee from Starbucks after like 4 o'clock, which kind of sucks for me because I go to bed at like 10. So now baristas have less stress on them. They can make the coffee better, they can make it more efficiently, and they can offer more different varieties which they couldn't have in the past. This is going to be a huge investment not only for the baristas but for the customers over time, as they had some union issues which we'll get into. Starbucks last year was also dealing with a huge unionization issue with all the employees unionizing. Basically, they were claiming they weren't getting the benefits, pay, etc. that they deserve, and, unhappy with their current work environment. Now, me personally, I didn't think this was a great move by the baristas themselves, especially compared to other local cafes or restaurants that you could be working at. Typically, when you're looking at for a full-time career, Starbucks barista typically isn't the number one option. Combine that with, I already thought they had really solid perks for their employees, such as company stock, above average pay, retirement accounts, and they'll even pay for your college in some instances. I already thought Starbucks had some really solid benefits for their employees. I thought they were kind of out of the right to be complaining about a situation that I already thought they were spoiled in when it comes to their benefits, pay, etc. The unions were a huge issue for Starbucks when it comes to the stock price itself, and it drove a lot of fear into investors, and the stock really sold off a lot and went into the 70s and 80s. Compared to where it's at now, sitting near 100, it looks like it was a good time to buy. Those issues seems to be way in the past for Starbucks, and they obviously made those reinvestments back to the employees with the form of the new brewing technology. Also, they suspended their share buyback program for about a few months. This was mainly just a political move by CEO Howard Schultz, just to kind of show the press and mainstream media we're more about our employees and the shareholders, when in long term they're going to be mutually beneficial for both. Alright, now let's look and see how Starbucks is actually performing financially, as this is really one of the biggest things that you want to look for when you're looking at your companies, to see that everything checks out when it comes to their financials. We'll start off with the revenue growth for Starbucks, and we can see that their revenue growth has been stellar. Just ideally what you want to see when it comes to a company's revenue and free cash flow. Any growth in general is just a straight line up to right. They have a 5-year revenue growth rate of 12.43% and a 10-year revenue growth rate of 12.21%. Very solid growth rates. But we all know as investors here, revenue means nothing if the company isn't producing real free cash flow to pay back to shareholders in the form of dividends, buybacks, or reinvest back to the business. Starbucks' free cash flow does look a little different from the revenue, but here are a few big things we need to keep in mind. Number one, China was not impacted at all during this time, so China sales weren't resulted in that free cash flow. If Starbucks doesn't have those China sales, their free cash flow will obviously be lower than it would be with the China sales. China sales will be in effect for 2023, so that free cash flow should be higher as reflected in the last quarter. Last quarter, they produced a really solid amount of free cash flow per share, coming in at 93 cents. We could see, obviously, in 2020, they had to close their stores, so they didn't really have a lot of free cash flow that year. And then in 2021, they had a really solid year, and then 2022 was obviously more of a bounce back year. I think there's going to be a lot more consistency with Starbucks as, those international stores stay consistently open, i.e. China. If China consistently stays open, their stores, they don't have any crazy lockdowns or whatever, I would expect that Starbucks free cash flow growth to be a lot more consistent going into the future. But Starbucks' free cash flow is a 5-year growth rate of 3.73% and a 10-year growth rate of 14.48%. But keep in mind, this has been really volatile in the most recent years due to the store closures in China. I would expect a lot more consistency in the more coming years. Let's take a look at Starbucks' dividend, and they've had a really solid growing dividend over the last couple of years. Last year they hiked at 8.16%, and this upcoming September this month they're actually set to hike their dividend. I would expect it to be in the 6 to 8% range looking at their financials and free cash flows. They have a 3-year growth rate on the dividend of 8.93%, a 5-year growth rate of 8.04%, and a 10-year dividend growth rate of 17.57%. That's the dividend snowball and work there, folks. Starbucks is an amazing dividend growth company. Starbucks is trading at a pretty historically high dividend yield right now of 2.09%. Currently, Starbucks' payout ratio is 68% based off of net income. And right now, their cash flow payout ratio is 50%. So it looks like as Starbucks continues to grow their business, their cash flows, that their dividend will be a result of that. Now let's move on to the valuation metrics for Starbucks, and we'll dictate what price is acceptable for our buy range. Let's hop into our valuation projectors, and for this, we're going to be going to dividenddata.com, which is the sponsor of today's video. If you want to get access to these valuation metrics yourself, play around with your own projection numbers. It's really fun to do. You could try it out for 2 weeks free. Links in the description. You also get access to research tools, which will help you find new stocks and new investments and do research. It will save you so much time compared to using online free resources, and it's much less of a hassle. I use it for whenever I'm researching new stocks or looking at a company's financials, and it saves me so much time. So if you want to check it out, links in the description. Try it for 2 weeks free, play around with it, do all that. We'll start off with a dividend discount model, and for Starbucks we had to plug in the current share price, the annual dividend per share, and for the annual projected growth rate I put 7.5%, which I view as pretty conservative for it. Historically it's been in the 8 to 12% range, but over the long term I would expect it to range from the 10 to 12% range, but that's long term, 10 years plus. And then I put a discount rate of 9.5% because I could just invest into an index fund and pretty much get that same return. And for the present value, we got $59.44. Now, I did go very conservative on these estimates, so I would expect if I were to put in the more aggressive or what I believe they could have a potential return on, it would be in the $70 to $80 range, but these are very conservative buy metrics, and I'm willing to pay more of a premium as I am a younger investor and I love quality, which Starbucks I've definitely realized has. Next, we'll use the discounted cash flow model, and me personally, this is my favorite model to use, as we're buying a business for the present value of future free cash flows. So we plug in the current share price, the free cash flow per share, which currently is $2.23, which is historically lower than what it is, obviously, as I mentioned, because of the China. We have the free cash flow growth rate projections, I put as 10%, as I think they have a lot of potential there with China. And total years to simulate, I did 40 years because I'm a long-term investor. And we put in our discount rate of 9.5%, and we got a present value of $98.07. So it's right about where it's trading right now. So this is a potential indicator based off of the future free cash flow growth of Starbucks that this could be a potential fair price for the company right now. And lastly, we'll do Graham's valuation. Now, a bit of a warning here, Graham's calculation is very conservative compared to the others here, and they usually, when I'm doing my estimates, it's usually the lowest when it comes to the acceptable buy price. So we get Starbucks' earnings per share, which is $3.28, the expected growth rate, which I put at 10%, and the discount rate of 9.5%, and we get a fair acceptable buy price with Graham's calculator at $43.30. Now that's obviously cut in half from what the stock is at right now, so looking at that, I would definitely not buy too deep into that. So we have acceptable buy prices of $43, $59, and $98. Now, which one would I most look deep into? I would probably say a discounted free cash flow where it's at right now, that $98 mark. And where do I think Starbucks is a fair value when it comes to the buy price? Me personally, I think China hasn't really been priced into the stock, as there are a lot of uncertainty and risks, and that kind of have a discount on the stock. For me personally, I think Starbucks' fair value is $110 to $115 range. I don't believe in waiting for the stock to crash 50% before buying a company and just completely waiting on the sidelines. I'm a big proponent of buying a great business at a fair price, and I think that's the indicator with Starbucks here. Me personally, if Starbucks dips into the $80 and $70 range again, I think that's a really good price to get it at. If the China growth for them is really as good as they say it can be, and they can keep their stores open over there, I think $120 to $130 is definitely a place where I could see the stock trading in the short term. At the end of the day, I believe Starbucks is a wonderful business, and I'm a big proponent of buying a wonderful business at a fair price than a poor business at a really good price. I love their business model. I love the fact that they have pricing power to keep in line with inflation. I love their dividend growth, and I love a lot of things about this company. Me personally, Starbucks is a core holding for me, and I plan for it to be a core holding over the next 50 years. If you appreciate the video that I made, all the research that I did, and the information that I hopefully shared and helped you learn everything, I would really appreciate if you hit that subscribe button for me. If you want to have more conversations with like-minded dividend investors, join the Discord link in the description, smash the like button, and of course, do dividend stocks, not drugs. Have a good one.